All right. Good morning, everybody. Happy Monday. My name is Signet. I'm the one that performs these morning briefings. I had someone mention the other day that I never introduce myself. That's a good point. I never do that. I just always assume everybody knows who the heck I am. So, what is on the agenda today? As usual, and every single time we go to perform the morning briefing, you want to start with the economics on the day, and you want to start with what happened in the overseas markets. I do these morning briefings not because I'm trying to give you a leg up or give you a fish. I'm trying to teach you how to do these for yourself. That's why I do not look at specific charts for you when you ask me, can I look at ABC stock or Joe's tree service? No, I'm not here to go through your list of junk. That's what we actually do when we live stream in the mornings and large caps, pennies, and in the futures room. That's what that stream is for. This is for your morning briefing. This is where you get an idea of what to look for on the day. If you would like to ask questions, by all means, come into the Discord and ask after this stream is done, and I will gladly answer questions, help you look at stocks, review the trades that you're in, help you decide how to get into a trade. I would happily do that, not during this stream. We are on pause right now, a little bit from 5 things you need to know, the Bloomberg email, rate bets. Everything is looking at the dollar and the bonds right now. And one of the firms even is now projecting a fourth rate hike. And something that I had mentioned last week about the way they run uh, the repurchase program. So we'll come into that as well. So rate bets. Goldman Sachs is saying they're expecting a fourth hike this year and the balance sheet runoff to start in July, meaning that they're not going to keep the tally full. Right. So this is going to be a big game changer. A lot of us were not trading during the last taper, which was in 2013. We're kind of newer to the game since then. And we haven't really been around a market that wasn't just buy the dip, rip all the time, right? In the last 2 years, you didn't really need to know how to trade to be profitable. All you had to do is just keep buying the dip blindly and ignorantly, just buy the dip, right? That's all you had to do. Just buy the dip. That ain't going to work forever, right? We're going to get into another kind of market where that doesn't play. Another thing in the Bloomberg email is it was quiet last night, that around the world, going and looking at other Asian markets, and now with Hong Kong closed and London open, things are quiet. Now, this email came out before the Nasdaq broke its weekly low and continued to move lower in this beautiful move that we're going to get to in a minute. But in the overnight hours, when we get up in the morning, what we want to ask and what we want to check is, did anything happen around the world that I need to know about? And are investors anywhere else in the world focused on something? And the answer is no. So we're going to be the catalyst today, right? Not riding the wave of the catalyst from the other side. Why I keep closing that thing down. Coming up, okay, this is the last one. Wednesday's the big day that everybody's looking at, but there are a lot of economics coming through this week, right? And just like last week when bad was good and good was bad, well, if you don't want to see that fourth hike, then you would really want to see some bad news on the economic front, right? So, the little free email from Bloomberg, 5 things you need to know. That's where that came from. You can go to Bloomberg, sign up for it. It's free. It doesn't cost you anything. Go to the economic calendar. If yours looks like this and it's just really cluttered and it's got a lot of stuff on it, hit the show all button to hide everything and then just turn on the Econo Day event. That way you can see what it is. I like to grab that description and bring it across next to the time so we can get a clearer picture of what's going on. Kind of scoot it down a little bit, maybe hide, the overseas ones because I won't be in the market that late. So that leaves us 10, 11:30, and 12:30. The Fed is going to be on Capitol Hill this week, so it's another thing to keep in mind. The markets tend to kind of range while he's up there answering questions and being publicly flogged. So it's going to make for boring mornings. Definitely going to want to lean away from the sectors on those mornings and maybe lean towards our watch lists. Right, it's going to be a lot of that this week. We do have additional auctions at lunch. For anybody who's in my coaching environment, you know what I'm talking about here when it comes to the lunches. This is very likely to break the lunch window. So definitely be keeping your eye on that for your opportunity, and just don't get caught in it. Right, stand aside, let it happen, and then trade the results. So I was talking about the Nasdaq breaking its weekly low. That's these purple lines right there are the lows. But we're gonna start with the S&P because it's where we always start. I had a trader tell me, "Well, I don't. I'm just a day trader. I don't need to go out to the daily chart." No, I mean, we don't need to come out here, right? But why would you not want to come out here? Come out to the daily chart, take a look around. You can see that we are underneath the 50, the 20, and the 10. Or we can say we're underneath that orange, green, and blue moving averages, right? What we do still have is the black moving average, which if I'm on a black chart, this is usually a white moving average. That's the 100, right? So 100 is underneath this. What's important to note, even though there's all this junk on the chart, I understand it probably looks really cluttered at the moment, is we want to be thinking about where the week are. We on are we in the middle of the week, or are we outside of the previous week? And you can see that we are outside of the previous week. So the S&P and the Nasdaq have expanded at this point outside of the week. Now you can see back here on this week, just because we're breaking to the downside of the week doesn't mean anything, right? This big weekly candle here, we left the range, came back in. So, just because we're falling out of it at the moment doesn't mean that anything really negative. By all means, don't go running out there and trying to short everything. We're outside week. There are no moving averages on the ES on the higher time frame that we can lean on until we get to 45.60. That's about 80 points away. Here's the ES on the 30-minute chart. Let's go ahead and make that a 1 hour. So you can see that shallow area. We've gone through that. We've got a volume node or some volume support around 46.30. And then after that, it's just decreasing, right? But the major shallow area, just like we would expect it to, price moved very fast through those shallow areas, right? In the blue is time, and in the green is volume. So volume by time and volume by price. Green is price and blue is time. So volume by time, you can see that we didn't spend a lot of time in this area. I mean, that makes sense. We can see it in the candles. We moved through there very quickly. We can also see we didn't feel very much volume at that, right? At that price. Moved through there relatively quickly. Well, now we're moving through this shallow area. We're right near the bottom of it. Price aggregates, so it's very likely that this is going to be a first touch bounce play. It's also the last shallow area. After that, it's just junk. There is an argument that we were out of the box and now we're back in the box. And once we're in the box, we expect to go from high to low, low to high, high to low, low to high. So that would put us right there at that 45.50, 45.60 range. Again, just like we were talking about on the other chart. Confluence. This is think or swim. So for today, we're going to look for price to aggregate, meaning make some form of megaphone pattern. Forgot I had that extension on. It's going to drive me crazy later. So we're going to be looking for that expansion. We were presenting with the H pattern. H is often referred to as hell for shorts. It's a bullish pattern. Oddly enough, we actually want price to go lower than the previous pivot and then to come up. It's supposed to trap traders. So when you have a double bottom or a triple bottom or an H pattern, you're not looking for price to perfectly pivot off of the previous pivot point, right? You're looking for it to go just a little bit farther. And it makes sense when you think about where the traders are, where they're putting their stops at, where they're looking to engage in the market, right? And you can see that if you use something like Bookmap and see where the liquidity is. So we've expanded just a little bit farther. We're going to be focusing on at least a 1% move in either direction. Now, that black line that you see is the daily 100 moving average, right? You just go in, type the word daily, and you can get a daily moving average. So if I wanted to know where the daily 20 period moving average is at, or weekly, or any other higher time frame that you want, so you can see that we're underneath the 20 period daily moving average, right? It's over our head. And we got the 100 under our feet. That 100 is a little far away. It's a 2% move from our current location, and we're already down 0.5%. Can the ES move 2.5% in a day? Oh yeah, absolutely it could, but it would really take some fireworks. So if we're going to make that kind of move, you're going to see it in tick, trend, AD, market breadth. It'll be on everything, right? The algos will be lit. One thing to keep in mind, if we're going to see that, it may very likely be when we see bonds also making a move, which we're going to get to that. But no matter what it is you trade, if you're a futures trader, or you're trading stocks or options, whatever, you're in Facebook, X Steel, Google, don't just sit there looking at the one single thing that you're trading, right? If you're trading Google, don't just look at a Google chart. You may as well open your hand and put your palm on your nose and then try to look around. You can't see anything because your hand's in your face. If you're only looking at the one single thing you're trading, then you're blind to the rest of the market. And whatever it is that you're trading is connected to the rest of the market. So this move in the ES, it's not just because something's moving in the S&P. It's because of the aggregate marketplace of what is going on everywhere. In the dollar, in the bonds, the Dow, the Russell, the Nasdaq. So watch the market when you're trading, not just one random name in the market. A 1% move is a good, clean, normal move. Well, we've already made half of that since we've opened in the Globex. So we'll just add another 0.5% and say a downside target, just a normal everyday downside target, would put us at 46.23. Want to look at the ADR on the day, the average daily range. What's the ES been averaging on a day-to-day basis for the last 20 days? So the ES has an ADR of 1.3, meaning we could easily move 1.3% and it wouldn't even be considered extreme, right? So we had measured a 0.5%. Let's go ahead and add 0.8, because 0.8 plus the 0.5 we've already got would give us that 1.3. So 0.8 would put us at 46.10. A good clean move to the downside could easily hit 46.10. and it would not even be considered extreme, right? So that's our downside target. And 4610, oddly enough, is right next to 4611, and that's the cog line. So you're better off just aiming for the cog line, COG, center of gravity. Center of gravity is only on the ES. It's only at the 11s. You don't need an indicator to see it. There is no indicator to draw it for you. You just get out your drawing tool and you draw a line at the 11. It's 4611. It's not John Euler's center of gravity, by the way. So if you go trying to hunt for it, uh, you're not going to find it. Unfortunately, the person who created this perspective of the cog lines on the ES, he unfortunately named it center of gravity before realizing that John Euler had already dubbed something else that, right? So it's just an unfortunate naming accident. Call it Bob's uncle. It doesn't really matter what you call it, right? It just matters that you mark the line. We are getting consistent and persistent lower highs and lower lows. So we are in a defined and developed trend to the downside. There is the 7 rule, right? The 7 rule that says a pullback is around 7% in the indexes. Well, a pullback of 7% from the high would put us right around, we'll just say the 4,500, right? Because those round numbers really are significant. And that's close to a 7%, right? So a, a, a good, clean, normal, healthy pullback would see the S&P pulling back to 4,500. And that is well within our boundaries for this week. We know that because when we bring on the weekly expected move, hey, imagine that. Things expanded this week. Here's the size of the expected move for the week. We would be looking at an outside break, more than a 1 standard deviation move that would put us right around that 4,500. Okay, and it also coincides with that 100 period daily moving average. So let's ask the other question. If we turn around and get positive, what is that going to look like? We won't make it back above 4,700 without some extraneous news, something really good, right? Something that, I mean, just kicks off and lights things up across the board. And there is not any expectation that we're going to get that kind of news today. So we're not going to get above 4,700. The most you could expect is some kind of move, like an impulse play that looks a lot like that to the upside, right? Big candles, one time framing, pushing in a general direction with absolutely no one going against it. It won't be subtle. It'll happen very fast and it'll be done and gone, right? So, what we're ending up with is a perspective that says we're going to stay in the box, meaning we're going to come back in and then just stay in the box, or that we're going to make a serious play to the downside. Now, we were talking about this in chat last night, and the general consensus is that the market's getting tired of tippy toeing. They want to make a decision, right? They want to just decide and let's go, right? This whole wishy-washy, gee, let's wait and see. The market's going to get tired of that. They're going to get tired of the wait and see, and they're just going to make a decision. Well, we call it a wash, right? And a wash is where they just come in and they just dump everything and reset like they did in late 2018. That was a beautiful wash example. They struggled after October into November, just struggle, 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 and they finally just said, you know what, screw it, and they washed it. So if you want to see what that looks like, go to the S&P and go to October into January of 2018 and into 2019. You'll see exactly what a wash will look like. So they're either going to do that, they're just going to give up and say screw it and dump it, or we'll take the other side and we'll run this back up again. It's not going to be decided today, but at some point the market will say enough is enough, right? So that deals with the ES. We flip over to the Nasdaq. You can see that the Nasdaq broke that week that we were talking about. We are outside of last week's range. That is a massive candle. It's a massive range. It's huge, right? It's really, really extreme. And it doesn't even seem extreme to you newer traders because you've been dealing with extremes since COVID. And there's not any change coming anytime soon. Right? The only change I can see is it's going to get worse before it gets better. But we are outside week. We are underneath on the weekly moving averages, the 10 and the 20, and we have the 50 underneath us. Bring it into the daily. We broke the 100. It's over our head. It's now our resistance. We've already been underneath all of the others. And you can see that the range or the box has now been broken. We're on the go. The red line down here is the weekly expected move. Looking for anything to rest on. We're past all of that at this point. There's really not a lot to catch this thing until we get to 15. So here's the Nasdaq 30-minute chart in blue, volume by time, in green, volume by price. We need to change this from a 30-minute to a 1 hour just so we can have more look back because we're at the bottom, right? We need more data. 30-minute time frame on a 10-day chart or 20 days on a 1 hour chart. So you can see we broke this pivotal level here. That was a make or break moment and it broke, right? So we are now outside of the box. When it comes to the volume profiles, when we leave the box, we're looking for an answer to that, right? Like, okay, we've left the box. Now what? Well, generally speaking, most of the time when we leave the box, we expect price to come back into the box. It's generally what it does, right? And while we're here, we're usually looking for the shallow areas to get some understanding of how will price move through these previous areas. Will it move very quickly like this when we have those shallow areas, like this when it has those shallow areas? Or is it going to consolidate more and have these higher volume areas? Again, just like in the S&P, consistent, persistent move to the downside. We are aggregating and well, we were aggregating. Now we're just straight up expanding, right? Price, that's all it does. Expand and contract. And right now it is expanding. There is always the possibility that we could come back inside the box today. Unlikely though, right? The box that I'm referring to at this point would basically be this. That's yesterday's low, yesterday's high. That is yesterday's candle, and we're outside of yesterday's candle. So we could come back in, right? We're down about 1% at the moment. The Nasdaq has an ADR of 2%. So we could easily make a 2% move in one direction or make a 1% move and then turn around and make that same 1% back again. It'll all be leaned on and dependent upon what's going on in the bonds and the dollar. So a downside play in the Nasdaq, we don't expect it to really go beyond the 2% unless the economic news really starts to get negative. So you want to be watching the AD today. That's the advancing versus the declining issues, right? And there's a really detailed way to do that on Thinkorswim. You go to Market Watch, you go to the Visualize tab, pick your index, right? And we're talking about the NASDAQ here. You can go in and choose NASDAQ 100. Well, when the market is open, this is going to tell you how many names, issues are moving up, how many issues or names are moving down. And the one that I really watch next to that is the capital. how much money is coming into the Nasdaq, how much money is flowing out of the Nasdaq. A really important number to watch. We were again talking about this last night in the Discord, and the market had not yet reset, so we still had some of the old ones. This is what it would look like. So this is the S&P 100, but that's what we were talking about last night. So that's what I had a picture of. This was divergence, right? We had 60 companies advancing as we went into the close on Friday. So we had 60% of the S&P advancing, and yet look at the money flow. It was very, very negative money flow. And if you go and look at the chart, we were going down as we went into the close, even though we had more companies going up than down. Divergence. You can see this once the market opens back up again. These will be working again. It's the index watch. They are detachable, by the way, so you can load, like 5 of those and put it on your grid, right? Yeah. Because what we're going to be looking for is what in the Nasdaq is making the move, right? What's causing the continuation to the downside? Is it going to be those mega cap stocks, the FANGs? Is it going to be that? Is it going to be the economics, right? Like where did we come from? Where are we going? Kind of logic. So a negative move should not breach beyond a negative 2% unless things really start to pick up, and it should be clear across the board. It'll be like a negative news. It'll be on Bloomberg. You know what I mean? Like it'll show up in Finance Juice, Bloomberg Live Squawk. It'll be in everything. If it's going to get that negative and we break below a -2, it won't be subtle. On the other hand, we're very likely to just come right back inside of the box too. Some form of V bottom or midday play, midday reversal. So that covers the two futures markets that we generally cover. Definitely want to point out and highlight that everything that's been going on is directly connected to what is going on in the dollar and the bonds. So they're trying to get ahead of the Fed. And now, with one of those firms talking about 4 rate hikes this year, it's like they're just setting the benchmark just a little bit farther. And they're talking about, well, how aggressive is the Fed going to get? They've turned hawkish. How hawkish? Oh, it's going to be this bad. No, it's going to be this bad. No, no, no. I bet it's going to be this bad. It's like they're all one-upping each other. So they're getting more and more and more extreme on their forward projection, right? And then everybody's talking about inflation is going to get worse. So they're trying to get ahead of the game. Maybe they're going to overshoot, right? Maybe. But in the meantime, you definitely want to keep your eye on the bonds and the dollar. Now, that very clean, very beautiful price action to the downside. No joke, man. I mean, the bonds have just been amazing if you're a bonds trader. Keep your eye on this through the day. Its move is going to give you a little bit of a heads up, right? Same thing with the dollar. You can see that we've had a wild ride with the dollar. We're just back and forth, back and forth. But some of the real deal comes in when you start looking at it from out here. Now, it doesn't matter if you want to see a strong dollar or a weak dollar. It generally speaking, it comes down to why is the dollar making the move, right? The why behind the dollar moving is more important than just seeing the dollar move. It's hard to find a good source for the dollar. One good place for that is the economic calendar, FX Street. When you go over here, and you're looking at the expected impact from econ events on the day, this free little excerpt right here generally talks about the dollar. It's not always there because it's not always free. They're trying to sell you something, right? Of course, they want you to sign up and subscribe and do all of that kind of stuff. You don't have to. I'm not signed in. If you've never been here, you can make a free account, but they will bomb your email and just completely harass you to no end. So, yeah, I mean, maybe give them a fake email, but you don't have to sign in, right? I'm not signed in. You can see all this just fine. But getting some perspective on the dollar can be a little tricky to find. This is one place, and then going to your broker. Honestly, I just think people don't go there enough. Schwab, Fidelity, E-Trade, TD Ameritrade, Interactive Brokers, whatever big broker you have, go to their actual website. They are in competition with each other because they want you, right? And they're going to continue to fight with each other. And they're going to keep trying to come up with newer and newer and newer things to impress you and to get you to come over to their service, right? So when you go over there, depending on which broker you go to, start looking around. You're going to find market overview, analyst reports, calendar events, sectors, and indexes, and they're going to break it down for you. They're going to give you a very clear understanding of what they see. And it's a great heads up on the day. It's free, by the way. So while you're over there looking around, see if you can find anything about the dollar. See if any of their analysts or any of their people have wrote anything about the dollar that day. Yeah. Then you kind of get into the habit of going to the same place, looking at the same material, finding it in the same location all the time. Thinkorswim also has a publication called the Ticker Tape. If you are a Thinkorswim user, not only will this help you use that platform better, but it also has amazing insight, free indicators, just all kinds of stuff. And it's searchable, right? So if you want to learn more about how Thinkorswim deals with ratio, for an example, or if you want to learn more about sizzle, that's a unique, specific thing just to Thinkorswim. You could go here and just type in sizzle and read 50 articles about that darn thing. So keep your eye on the dollar, keep your eye on the bonds. They are going to be what drives our market, right? When we're looking at like what's going on in the marketplace, why is the S&P moving? Why is the Nasdaq moving? A lot of times it's because there's an external influence in something else that's making these move. Very often it's the dollar or the bonds. I did notice that the VIX is picking up. I built a volatility school. So if you do not understand the VIX, join the Bullish Bears, go to the Next Level Library, and you'll find 20 videos, 10 that explain the VIX in excruciating detail, and then 10 more that show how to use the VIX in your analysis and trading. The first 10 are painful to watch. They're boring, they're slow. It's discussing and explaining the VIX. It's boring. It's really good for colicky kids, children that won't go to sleep, insomnia cure, right? It's boring. I know it's boring, but I mean, it's not like the VIX is a sexy thing. You can't really kind of glamour it up and make it look good. Something to pay attention to though when you're looking at the VIX. When you go over to Thinkorswim and you're looking at the VIX, look at the date that we're on. So we're on the active 9. It's the January series. The January series really does have 16 more days left to go in it, and it's pricing in right around $21.05. Okay, so why is that important? Well, if you go out 30 days or even 37, because that's the next one that has a price on it, there's a price on it. Okay, so what we're looking at for and what we're trying to answer is, are we in contango? And if we are, how steep is the contango? Or are we in backwardation? And if we are, how badly? Right now, contango is normal, right? Contango is normal. It's no big deal. It's what we want to have, and it's what we expect to see. The steepness of it can be a little concerning. What we don't want to see is backwardation. We don't want to see the back end getting cheaper than the front end because we're looking for that general curve. The curve, so to speak, that we're looking for would be this. So this is the shape of what contango looks like. What we don't want is it to be too steep, right? We don't want it looking like a rocket ship taking off. So kind of keep your eye on this. You don't need to go out as far as September of next year. You can go in and adjust the curves and knock this back a little bit. And what we want to make sure of is that this front end, you can see we're looking at February and March and April. We don't want to see this going higher while the September, August, and July is going lower, right? We don't want to see that. That's backwardation. So you can see we are bidding up a little bit here in the VIX futures. If you are on a platform that doesn't have VIX or you just don't like to look at the VIX futures, notice when I type in VIX at the top and just pause there. Don't hit enter. Don't do anything. Just stop. Look, it's got the VIX 6-month, the VIX 3-month, the VIX monthly. You can also hit something like the 9 at that point, and you can get a VIX 9-day, right? So just with ETFs alone, you can diversify your VIX perspective and spread it out into various time frames and look for contango and backwardation that way too. So what's moving this morning? We've gotten through the futures. Take a look at the sectors. Finance is positive again this week. So is the dollar at this point. The Asian ETF, emerging markets, kind of almost flat. They're giving it back, right? We had a little bit of that pop earlier. Then we start getting into cloud services and big name tech. IGV is an ETF that carries some pretty good names in it, right? We go in and look at the names that are inside of IGV. So this is IGV, that ETF that we were just talking about. These are the names in order by their market weight. Now, I haven't gone in and readjusted this, so that the weight may be a little wrong, meaning Microsoft may now be in front of CRM or Oracle may be in front of Microsoft. I haven't gone in and readjusted their positioning, but it doesn't matter because the names didn't change, right? Just their order may have changed. These are the names that are moving in the pre-market this morning that are causing this ETF to move in the pre-market, right? Cloud services is the same thing. It would be CLOU here, and then the names here that are making a move. This is when I talk about using the sectors to kind of plot out your trading day. This is what I'm talking about. Which of these ETFs are moving in the pre-market, and what are the names in that ETF that are causing that ETF to move? Because we can follow that down the rabbit hole for trade opportunities, trade ideas. Tech is down more than 1.25%. I mean, that makes sense. Minerals and mining is down slightly. We can also, jump in and take a look at that. Same thing, the ETF in the bigger section. These names are the names that were making moves last week as minerals and mining was making moves. Industrials, communications, healthcare, energy, they're all slightly down. Things start to get really negative when you get into like biotechnology, airlines, technology, cloud computing starts to get really nasty, right? So we're going to be looking for a reversal on that. Bringing it up to things that are up in the pre-market, like a gap scan. If it says 100, then it's basically pressing against the high of its morning. Amazon is on that list. So we come back over to a regular chart and kind of maybe widen it out a little bit. It hasn't caught up yet, but Amazon had broken, set a new low, which gave it that 100 in the pre-market. Keep in mind it's Thinkorswim, right? Thinkorswim is not um, this is not known for its pre-market prowess. Normally we would go to something like TradingView or TrendSpider. I was just trying to keep it all in-house today and not go there. I think we're going to end up having to go there anyways. But pressing in one direction and against the top of its range or the lowest part of its range, Amazon, Tesla, Walmart, Western Digital, and it just kind of spreads out a little bit more from there. If you look at how far they've gone, percentage wise, Nokia has made a significant move this morning. Laser or Lumina And seriously, I mean, that move in Tesla, yeah, unfortunately for people that are outside of the US, your choices are really limited. Tasty Trades or Tasty Works was expanding into Canada and other places. And if you're in Canada, you really only have IBKR. I mean, that's really like that's all you got. Um, if you're outside of Canada and you're not in the US, I think you still have a pretty good selection. I would start with something like Tasty Trades or Tasty Works, which is my main broker. Um, Maybe some of the digitals. I don't know if Robinhood and Webull or any of those will work with you. Thinkorswim, I have clients that I coach that are overseas, and as long as they're not in Canada, Thinkorswim seems to be the default. But the one that I see the most for people outside of the US is IBKR, Interactive Brokers. I've used it. It's clunky, but I mean, if that's all you can use, then it's better than nothing, I guess. But I found IBKR difficult to use after using this for so long. We're getting some pretty significant moves, but for the most part, it's all follow through, right? It's just that continuation of what we've been seeing. Tesla did break that 20 period daily moving average. This could really get nasty. I learned long ago not to long duration swing this thing short, but on a day to day basis, trading in this to the downside is an amazing trade opportunity. The volatility that you see way out here on the daily does no justice to how good the options actually change their implied volatility values on an intraday basis. Man, yeah, this thing is a scary monster to day trade, but we're talking about making house payment size profits in this thing, right? It's that good. It's one that there are entire communities that do nothing more than just trade this all the time. Phenomenal. It won't last forever. Sooner or later, it's going to turn into a duck like everything else. But until it does, if you've got the capital to do it, you may consider it. The thing is, though, if you're going to do that kind of size, you might as well just go to the SPX or the NDX. I mean, seriously, I that's my go-to rather than Tesla. Yes, Tastyworks has options on futures, and it's where I trade my options on futures. I sell puts on the MES because it's cheaper than selling puts in SPY. Buying cost reduction wise, the amount of buying power that it takes to sell a put. You can sell a put in the MES way cheaper than you can sell a put in SPY. So I use Tastyworks for 90% of all of my options trading. I do very little trading on Thinkorswim, and when I do trade here, it is almost exclusively day trading in options, which I don't do a lot of day trading in options because if I want to day trade, I'll just trade futures and not futures options. I will just straight up day trade futures. All right, as we usually do, we want to quantify and ask, where are we on the day for the S&P, for the Nasdaq? How many names are advancing at this point? How many names are declining at this point? So we know it's a declining day or a reasonably flat morning. The Nasdaq pre-market, how many names are down by at least a half of a percent? 41. So 41% of the Nasdaq is down this morning by at least a half of a percent. That's feeling pretty bearish, right? Now, of course, this can change. It can all flip over, but that's what we have. There's no reason to go against what you've got. Same thing, we can ask the same question for the S&P. How many names in the S&P 100 are down at least a half of a percent? 25 names. Why is it so much less than the Nasdaq? Well, the S&P has financial names in it. The Nasdaq 100 does not have financial names in it, right? And finance is doing reasonably good this morning, so it's only down. Only 25% of the S&P is down this morning. So keep your eye on the sectors today, everybody. That's going to be your earliest warning or heads up. The individual names, if you're going to go in and try to play it through the stock pick using your scanners, I would focus exclusively on names that have weekly options, and then because that is at least a reasonable start of liquidity. And then I would hone in from that and look at peer groups, right? Because when you look at the S&P sectors, it's old school. This thing doesn't have, a modern perspective like the EV market or the chip or um, the pot stocks, or kind of go down the list. There's a lot of names that are left out, a lot of industries and sub industries that these 11 main old school sectors just don't cover. So I got for you guys, be careful, be safe, have a good morning, and I will see all of you in the futures room, which is where I will be streaming this morning. That's my new Mondays and Fridays spot.